Stock markets absolutely crash down, tripping circuit breakers in the Asian markets, shutting down their trading early morning hours. We're seeing a lot of information come to bear also with breaking news regarding Donald Trump and the tariffs, what's going on with China. Altcoins absolutely crushed. Bitcoin is breaking down, but is it yet in a bearish structure? Or is it still maintaining a bullish structure? We've got Kevin Svensson coming on today. We're going to be going through the charts, breaking down all the signals that you need to be paying attention to. Everybody hit that like button, hit the subscribe button, ding the bell. I want you all to get active in the live chat. Let me know. Are you worried? Have you been stocking? Are you hodling? Have you already sold? Where do you think this market's going? I do think we're in for some pretty big shakeups. So everybody hold on to your butts. We're going to be diving through the charts, through the signals, all this and more on this stream today. Hope you all are feeling okay, because sometimes the best opportunities come in the most difficult times. I love you all. I appreciate you all. Let's get into this. I want every single one of you to retweet this out on X over at Kelly Kellam or at Academy BitLab. You'll see it on my at Kelly Kellam page. But with that being said, let's get into it. Let's go. Markets are crashing. Market meltdown. What is Bitcoin going to do? Is the crypto bull market over? Let's get into it. Absolute carnage in the charts overnight. We did a breaking news space yesterday, Drew and I, on the Mario Nawfal channel with a number, some powerhouse guests, everybody from Gary Cardone to Simon Dixon to Samson Mao. The list goes on and on and on. We had some incredible players and everybody. One of the things I found from that was that there was a lot of confusion about what's going on in this market. So let's get into it. Let's talk about it, because we are seeing so much red across the board. But I guess gas rises to the top because we see Fartcoin is up. Kind of interesting there. But we're seeing on the weekly red, on the daily mostly red, except for some small coins that are just basically irrelevant. On the hourly, we saw a little bit of a pump this morning, and now we're seeing a little bit of a sell-off. We got a lot of considerations of going on right now. So everybody strap in, because we got a lot of things to cover. We see the crypto market cap has dropped now. Let's actually reset this. The crypto market cap is, right about just under $2.5 trillion. And when we look at the markets, I want you to notice something. Everybody, is that nothing has really changed. It feels like the end of the world. And yet you look at this chart zoomed out. What is this? This is where we're at. This, so you can see in the context where we're at right now, is we lost this small little intermediary trend line from this point back here in October 2023 to the support here. And look at that support there. Oh my God, we lost it. It's over. But in reality, what have we effectively done? Well, with this move to the downside, something I've been outlining on the channel for some time, even when we're still bullish, what did we do when people were calling me, oh, that bearish thing isn't going to happen? Those bearish things have all happened. And the bearishness is in the near term, not in the long term. What we're seeing is an incredible, I'm talking overwhelming, bullish backdrop for what we're seeing moving forward. But we have some near-term pain that we are dealing with right now. But effectively, all this price action is done effectively is break out, go to a new all-time high on the inauguration date, January 20th, only to break down and test right into the previous range high. Notice when you cut out all of the noise, no bunch of indicators, not what's going on in the news, looking at the shape of the price action, we have not broken the key structure that, one, we were looking to test at some point, and we have gotten that test. Now, beyond that test, what do we also see? Beyond the test right here, we also see a trend line that essentially goes from back here, December 2022, to support right here, September 2023. Look at that. December to September, boom, support. And then we got basically this projected out, which is now intersecting. It didn't seem tangible when it was all the way up here, but now we can see that this is basically intersecting an area that is two known zones. One is a previous all-time high back here. I'm talking last cycle, $69,000. And we got the rejection there. We got the chop right here, the rejection and the bounce. And this is intersecting right in the zone, creating this box of this previous all-time high and the current all-time, the most recent all-time high right here, about just at about $73,800, $74,000. We see the price action is now just effectively just bounced on this zone. But it doesn't mean it's over. We got to watch what happens in this region with the price action, specifically on Bitcoin, also as it pertains to the altcoins. So what happens in here will be very telling if we're going to get some chop before we ultimately resume to the upside. Now, the question is, are we going to have this sideways action that goes all the way in through May, June, July, August, and then start pumping into basically the end of summer? Or are we going to get a swift reversal on the economic discourse of what's happening with President Donald Trump and the current administration, and get something much more, in this zone, a little bit of chop sideways, and then into the end of May, start to see that move to the upside. The alternate of these two, realize this: if we lose this level right here, it doesn't necessarily mean it's over, but it makes a much harder case for the bulls if this does lose this, come reject and come back down and test into, somewhere into the 60s or potentially down even to $48,000. Now, the reason why that's important is because if that happens, then are we looking at something like we saw in 2019 with the price action having this massive parabola to the upside, the sell-off, the black swan that really brought us down, ultimately to then get to this upper bound? Or are we seeing something like this, where we had a market cycle top and we go into a bear market? There's a lot of considerations about everything going on right now. And we got the Fed meeting right now. It's not an emergency meeting. It's a meeting that was on the books from last week, but they're announcing it as an emergency meeting. No, they had the meeting scheduled last week, considering everything going on. We do have the FOMC meeting coming up in a couple weeks, almost a month into May. But we've got to pay attention to what's going on right now. And to me, I don't know how you feel, I'm still feeling like we are seeing some overwhelmingly incredible opportunities in this market right now. Of course, it doesn't feel like that, because when you look at the total market cap, minus USDC, minus USDT, basically looking at the alts, the Bitcoin and all the alts, minus the two largest stable coins, we are seeing blood in the streets right now. The question is this going to continue to the downside? Similarly with the others chart, effectively, this is still essentially within the same pattern it's been in. So although it feels so terrible, nothing has really changed other than the context speculation about where markets are going in the next, week to 3 months to 6 months. So we need to understand what we're doing, what our strategy is, and what our action plan is in this market right now. Because when we zoom in and we realize everything's hinging on everything going on with the tariffs right now, with everything going on at the end of the weekend, we did a breaking spaces last night, and it was tentatively scheduled before last night, because I told our team, the team over there at IBC with Mario Nafal, I said, listen, if they start to discuss a pivot, it's going to be major for markets. If they say, no, we're holding fast, it's going to be somewhat a little bit more catastrophic in terms of pricing into the week when the futures opened last night. And that's what we saw. And in fact, after that happened, when we basically got that commentary from Howard Lutnick that there was not going to be any delay on the tariffs, then you saw when the futures opened, everybody got to those trading desks and started a pretty big sell-off on futures. And then when the Asian markets opened, we saw the markets drop so fast that it actually triggered the circuit breaker, meaning they stopped trading. And then this morning, we got news from Donald Trump. We got news from speculated news. It was a rumor that there's going to be a 90-day pause on the interest rates and on the tariffs. And what we see, a move that was $4 trillion. $4 trillion move in the market that then ultimately this was a 20-minute move. 20 minutes, $4 million moved into this market. That's how impressive of a hold that we have of either pushing a bullish narrative or breaking down into a bearish narrative of max uncertainty we're feeling in the markets right now, only to when they announced it about 25 minutes later that we got a $2 trillion sell-off. So much so, and I actually did a tweet on this. I said the stock market trading on swings like a meme coin, a meme stock, was not on my bingo card for 2025. 8% 8% swing on S&P 500 alone, 4 trillion up, 20 minutes later, 2 trillion down. Max uncertainties here. Stay focused right now. Tune in on a daily basis. Also, if you are feeling super stressed with everything going on in the market, take a step outside of these narratives. Go play in the field, go ride a bike, hang out with friends and family. This will all work itself out. And I have some charts for you to outline some of what that means right now. When we look at what's going on here, President Trump says if China does not withdraw their 34% tariff by tomorrow, the U.S. will, and realize they are nearly a day ahead of us. So this is going to be interesting in how this plays out and whether he means eighth, basically our end of day tomorrow or China's end of day. But this, the U.S. will impose an additional 50% tariff. There is max uncertainty and excitement and hope and fear in the market. That's why when we just saw the rumor about the 90-day delay, we had a $4 trillion pump in S&P 500. The rumors dispelled, $2 trillion back down. Now we get this. I think people are getting to a pretty big exhaustion zone in the market. And then I just want to point this out before we got Kevin in the wings. I'm going to be bringing him up here in a second. And I just, again, everybody, when we have guests on, make sure you're all retweeting this, getting it out, letting people know what's going on. Go over to my page right here. Hit that. Where is it at? Let me hit the reload the page. Scroll down right here. Hit that retweet button. Hit that like button. Let's get this out to as many people as possible. Let people know what's going on with this. We got Kevin Svensson coming on, sharing the goods. So let's retweet this and get this room as full as possible. We got several hundred people in here at the moment. Let's get it up to a few thousand. I know people are interested in what's going on, but looking at the two different metrics here, everybody, looking at these two different metrics and understanding what is going on here. We got the Bitcoin chart on the left. We have S&P 500 on the right. Notice two very different structures. On the left, we have a stair step to the upside, which ultimately this is only effectively tested the previous range high. This has dropped a little bit more down from that, but effectively just tested a previous range high. The S&P 500, however, has a basically rounding top, losing momentum, double top right here as well, breaking down from the lows. We had consecutive lower highs, and now this is actually broken down below this. We have lower lows on this as well. These are two different structures. Now, the correlation still remains a bit with directionality, but Bitcoin is holding up overwhelmingly well comparatively with what we're seeing here, even if Bitcoin drops a little bit more. As I pointed out a second ago, if we do see Bitcoin start to lose those levels and start to make moves, down below this zone, down especially below the mid 60s, it's gonna be a whole different thing to look at. But Mr. Kevin Svensson, how you doing? Let's get this room full. Everybody retweet this out. Make sure everybody got the goods on Mr. Kevin Svensson as well. I got you muted. There you go. Sorry about that.
What's up, man? How are you?
I'm numb, but I'm excited. How are you doing?
Yeah, I mean this cycle has been a mess, a complete mess. Especially now we got thrown a major curveball, and this cycle is now playing out in a way that is very, very different from any past cycle, honestly.
Yeah.
The way that the market is right now, the way that we're sort of dipping right now, it's unlike anything we've really ever seen. And it's sort of putting a spin on like the 4-year cycle or whatever. Like, even though it may still be intact, it's like the way that it's playing out, it's very odd overall. But it's because we're in a transformative period, I think, in world history. All the things that are going on technologically, economically, monetarily, crypto revolution in of itself, changing the game. But yeah, so all these changes, it can just be a painful process. So I think we're just experiencing growing pains, looking at it from a very sort of bird's eye perspective. But looking at Bitcoin right now, what I find interesting is that Bitcoin is currently sitting right on the 2024 highs as potential new support. Right? It's not confirmed yet, obviously. We have a lower low, so there's kind of a double-edged sword here. We got lower lows, lower highs. It is still a downtrend from January, right? So here we're in a downtrend, but long-term, it's an uptrend. Previous resistance, you just go back in time here. 2023, previous resistance became new support. If you look at from this perspective right here, resistance becomes support here, resistance becomes support in August, and now resistance maybe becomes support. And so if you're looking at this chart, the Bitcoin chart, the weekly chart, and you just imagine that it's a random chart on a 15-minute time frame, what would you think about this chart? It's a 15-minute time frame, random stock chart. You go, okay, I mean, it's trending, previous resistance. If we bounce here, that's good news, right? For the 15-minute chart. And sometimes I think people forget to step back and try to, they don't remember to look at it as objectively as possible. We're also very influenced by, it just being the Bitcoin chart. And so it just gets clouded with all of our judgments and opinions and all these things. But again, if this was just a 15-minute chart, you go, well, if we bounce here, the trend continues most likely, or at least a retest towards, maybe a lower high at the very least, if we were to bounce here. If this was a 15-minute chart, I'd be looking at the 618 or the 786. And even if it was going to reverse, you'd probably still
what levels are those two levels at?
Right?
What are the price levels for the 68 and the 786? Because we have that CME futures gap all the way up to 84.5.
No, so it's actually it's 96,000 for the 618, and it's 101 or almost 102,000 for the 786. And I know those prices right now, I think nobody would be willing to even consider it at the moment. But usually, I've been asked so many times the past few days about the bearish scenario. And so that's kind of why I'm bringing this up, because even if we were to get a continued bear market or whatever, very likely you're going to have a massive retrace to a much higher level before getting your entire bear market to play out. There's many examples in past cycles. So the thing that I was telling my community today when we had a discussion about, of course, like the S&P all the way down, this is obviously a topic to discuss, the bear scenario. I said, even if we were going to enter a bear market from here, this is not a good deal, right? You're not getting a good deal on the price right here. In every cycle, or most tops for Bitcoin, if you just go back, there's always some kind of lower high bounce. Like you'll get a retrace up to the 786 in most cycles. It'll come down and then retrace up 618, 786. Those lower highs, those rebounds up, are really just classic moves, right? It gets you a little confused. You think it's recovering, going, it's 786, almost near the high. While that's playing out, it looks really juicy. Looks like you're going to break out again. But my point is, even if it's the worst case scenario, which people are talking about, that's why I'm addressing it. You're selling at the point of a bad deal down here. You wait for a little bit of a better deal to show up, right? It's not going to be a straight line down. And so for the S&P, with the way that things are going right now, I'm looking for, where did my chart go? It reset my chart. This is my old chart. That's annoying. I had such a great depiction. I don't know, maybe I could use this. That's not really what I was going for, though. But I'm expecting a trader's market moving forward, where we're going to get rebounds that look convincing and then retraces back, and just more news and more confusion. And I think that the market will be difficult to read throughout this year. And by the end of it, there may just be no major change in price. Like we may have huge swings without any major significant change in price in the end. It's sort of just there, right? And so with that in mind, what's very important for Bitcoin is that whenever the S&P does bounce and has an uptrend on a weekly basis or something, what's very important is that because Bitcoin is correlated to the stock market, yes, we had the other day where it didn't dump, which was really cool to see. But what's very important is when the S&P bounces, Bitcoin needs to make as much progress as it can on that bounce, because the correlation with the S&P is really all about direction. It's not about percentage gains. There are some, or there's quite a bit of structural correlation as well, but it's really all about direction for the most part when you're looking at the correlation between the two. The general direction in the market. So if the S&P provides a recovery rally or some kind of bounce, right? Bitcoin needs to make a lot of progress in that direction. That's very important. So that's what I want to see. If we don't get a lot of progress, and the S&P has made some big rebound up to, the 50% fib, the 618, the 786 for the S&P, and Bitcoin hasn't made a lot of progress, that's when I think, okay, that's showing some weakness here, and maybe I do need to be looking for the exit door at these higher levels, right? But if we make enough progress, then we can avoid that scenario. Maybe we actually do just build up and out and have a continued run. And this was all just sort of the big plunge before the next leg up. So I'm keeping my mind open to whatever possibilities may show up. As of right now, once again, it is just previous resistance, new support. I know it's crazy. Like, we dumped so much, like, oh my God, right? Everyone's freaking out. But it's just a stair step still. And the S&P, the same thing. The structure is a little different. Like, the S&P in August was here. So let me just bring this up. The S&P in August was here. Wait, you guys can't see that. I've been drawing on the screen with a brush tool, and I just realized you guys can't see it. So let me just mark it up with a circle. And in August, where was Bitcoin? Bitcoin was here, all the way down
And that
here below the all-time high.
That's the yen carry trade sell off before the launch, isn't it?
I believe so.
Yeah.
Yep. And that's the big structural difference, right? So there are differences in the way that Bitcoin behaves against the general markets, but it's about the direction in the long term that is the most important thing. So Bitcoin is down here in August below its all-time high. The S&P is above the previous all-time high from 2022 in August, these yellow arrows. Okay, so there was a difference there in structure. Now the S&P is touching 2022 levels, and Bitcoin got pretty close. But it's generally still aligned, very much so. So it is very important to keep an eye on it. I mean, I used to talk about the correlation for years, and people were always telling me, "Oh, it's not correlated." And I don't even want to get into the discussion right now, but whether it is or it isn't. I mean, if you have eyeballs, I think it's pretty clear. But the good news, I guess, is that, Bitcoin has shown some changes in the very short term, in the way that the tariff news came out. The S&P had the worst week in years, like epic dump. And Bitcoin at the time just sat right there and didn't budge at all. And to me, that was a very interesting data point, because I watch the correlation every single day. I look at it on the 1 minute chart. I look at it on the weekly chart, the monthly. I look at the correlation all the time. And when that happened, I was like, whoa, okay, this is actually really cool, because I guess the market decided, well, tariffs don't affect Bitcoin. You can't tariff Bitcoin. And in fact, Bitcoin being borderless, maybe there's some sort of benefit that it would have, in a world with tariffs. So I thought that was really cool. We did get some pre-market speculation, like pre-market speculation to the downside when we were coming up on yesterday's futures open for the stock market. A few hours before stock market futures opened, we lost this support because I guess traders got nervous and they were like, they weren't sure what to expect. And so some of them may have taken the exit door and sent the price down. Though the S&P is currently up on, well, since the open, it's down from Friday, but it's up from the open. Bitcoin's bounced a little bit. So we're kind of just in the middle. We're in the middle of the storm here, and we at least have some support coming in at a very, very critical point. So that's at least good to see. If we hold this zone, I'm pretty satisfied with that. A 30% correction for Bitcoin is standard. It is a very standard move historically. All right. The
Well,
here
on that note, we just got
34%.
on that note, we did just, and of course, this isn't Bitcoin, everybody, but all these things are showing pretty strong correlations with uncertainty in markets. We just got a tweet coming out from regarding Larry Fink. Larry Fink says he won't rule out another 20% market drop. That is massive, especially if you're considering this on something like the S&P versus Bitcoin. Why the sudden bearish sentiment after a 17% drawdown on the S&P 500 and a 31% pullback on Bitcoin? It's going to be interesting to see how this does play out, but I'd love to get your thoughts on this as well. Quentin Francois, friend of the channel, as well as Lynn Alden, both posted this chart here. And this basically, what this is outlining is the U.S. 10-year note bond yield. And all of you out there, I know the majority of you are probably heavily in altcoins, and you're like, why are we talking all this macro stuff? Because all these are having impacts on the risk appetite in the market. And what does this show? What is this showing? Well, typically, Quentin breaks it down. He says, typically when equities sell off, when we're talking about the stock market, investors seek safety in government bonds. This flight to safety pushes bond prices up and yields down. But that's not happening right now. Yields are rising while stocks are falling. That means investors aren't moving into bonds either. They're pulling their money out of everything. When both equities and bonds are sold off simultaneously, it often points to a broader financial strain beneath the surface. Let's read that again. Often points to a broader financial strain beneath the surface. Now, there's a silver lining to this, everybody, because as bad as this is, when you are in the best asset of capturing of the devaluation of dollars that's ever existed, because that's technically what stocks are as well, but Bitcoin is the ultimate capture mechanism that we're starting to see. Yes, there's some de-risking right now, but big, smart people that are really understanding where this markets are going. And the fact that we have an administration that is fully behind Bitcoin and the crypto ecosystem now, I do think we're going to start seeing that flippening that I was talking about, and I hinted it out last week and the week before. The flippening that matters is not XRP flipping ETH or ETH flipping Bitcoin. That doesn't fucking matter. Boom. Listen, understand that. The flippening that matters is the flippening of everybody trading, or the majority of people looking at Bitcoin like a risk asset, like the Magnificent Seven. All these tech stocks are selling off, so Bitcoin needs to sell off because it's a tech. It's not. It's the ultimate money capture tool that can change your future. But the question is, can you hold on to the swings along their way? And the reason it often points to a broader financial strain beneath the surface is so important is because this gets to what? One inevitable conclusion. The system is screaming for more liquidity. Central banks will be forced to respond. And this goes also to Colin Talks Crypto. So we have the correlation right here with S&P 500 and Bitcoin. S&P 500 crashing, Bitcoin holding up pretty damn well. So everybody's wondering, is this signaling a bigger crash in Bitcoin and thus probably a cataclysmic crash in altcoins coming up? Or do we follow the correlation with the M2 money supply? Looking right here, if you basically track this forward 108 days, which is about the gap of time that we've seen with M2 pushing up, and then Bitcoin also pushes up. The orange line is Bitcoin. We see this drop overlaid, just like the M2 money supply in yellow, had the little resurgence, had the drop back down. We are technically on this correlation right on track. But this is why I've told you all, every one of you that's tuning in, whether you're watching on X, we got about 2,000 watching there. We got another couple hundred watching on YouTube and some of the other broadcast areas we're on. But this is why I said, if you're seeing somebody that tells you that they have the answer about what's going on, there are so many conflicting signals that is bringing this max confusion to light. There is not an answer. There's a number of different ways that you can stack into the probabilities of what's happening. This does suggest maybe we do hold up here and we're about to get a huge boom. I don't know. It's kind of interesting to consider all this going on. And then we look at Bitcoin and we realize, well, now we're doing bear market things, AKA looking at this price action right here, where the price action drops below the 200-day moving average, below the short-term holder cost basis, below the 21-week moving average, only to come up, test this, and then drop. Bear market vibes. We did get the slight drop here, which was, I think, about 37 days before the launch. We did get the drop here also below these bands. This was, I think, about 67 or 70 days before we had a pump up. Now, if that were to play out here, this would push us into the end of May before price action starts getting, back above roughly the $90,000 to $96,000. There's no telling what's going to happen right now other than you capitulating, hodling, and going and doing something a little bit more relaxing than getting trapped in these charts, or finding your opportunities and being okay with the stress that's involved. I'm curious your thoughts on some of those things, because, I think people are getting frustrated that when we're talking about a lot of this stuff, especially all of us crypto channels, it's like they don't give a shit about the stock market, but they want to hear what's going on with Aerodrome and Ondo and Chainlink. And I love all those projects and all these different altcoins. But right now, it's like we've got to zoom back out into the larger, economic landscape.
What people often in crypto, they tend to think that like we live in our own little bubble, and sometimes we do. And sometimes when things are at least stable for the stock market and global markets, or they're trending up, or they're doing really well, whatever, then crypto kind of goes into its own world, and coins are pumping on their own time or whatever. But when the traditional markets, global markets are falling like they are right now, I mean, fear becomes so contagious, right? The emotion of fear is very much like quick, like it sort of like swipes like a bear, versus optimism is like a herd of bulls. It has to build confidence. It's gaining momentum. It's building, right? And so it's easy to break things. It's harder to create them. So fear is a very contagious, I'll say. And so when people are just fearful, right? A lot of the speculators that are speculating on crypto are also speculators in the stock market. And so when their stock portfolio isn't doing so well, and they see crypto prices coming down, well, it just becomes self-fulfilling at that point. That they protect their capital. They start selling whatever. The bearish speculation increases across the board because of that. Because we crypto and stocks, yeah, they're different industries or whatever, but it's the same world that we live in. Now, I was showing this Google Trends. This is something that Matthew Hyland, who's usually on Mondays here, was bringing up. And he was talking about how every time the Google Trends spike, they have a spike. If you were buying on that spike, you're basically buying right near the lows. So if you go on Google Trends and you just do 2004 to present, every time you get one of these spikes, if you were buying during that, like you look at the term stock market crash or recession, right? Even the search term, I think recession, Matt was talking about. Yeah, every time that spikes, if you're buying in and around that zone, you're usually buying at a very good area of value, and you make money in the end. It's just difficult because when it's time to buy, you won't want to. And when it's time to sell, you won't want to. When it's time to take profit, you don't want to let go. Oh, I could go higher, right? When it's time to buy, oh, it could go lower. It's like
well, you want to see an interesting correlation? Maybe a bottom signal. I saw this and I thought it was quite entertaining. That is the the tantrum from Bill Ackman chart here, showing that when Bill Ackman finally goes on a rant about what's going on in the market, has marked pretty much the bottom. Persistent inflation pressures rant, boom, bottom. Treasury market volatility rant, boom, bottom. We just got basically a capitulation in his sentiment yesterday in some posts that he did, pretty long-winded post. And this is right on the heels of this massive drawdown. We just saw, what's really impressive to me is how much appetite for selling to de-risk that we just saw leading up to the tariffs and then following the tariffs, and the fact that there was no change in tariffs. So we had a pretty big sell-off. It feels a little bit manipulated in the market, because the second there is a potential, there's a 90-day moratorium or a 90-day delay. We had $4 trillion able to pump into the market. That doesn't say capitulation to me. That says if people are willing to switch narratives that quickly, an 8% swing in S&P 500 in 20 minutes is unconscionably out of context. So it's anybody's guess as to what's happening in these markets right now. Do you think that because I did see this earlier as well? I saw this right here that we did see this morning, and I'm going to show an update on an update on this. This morning, this actually changed a bit. The S&P Fed Watch tool, basically 53.2% to stay paused in May, potential 46.8% to have a rate cut in May, which is about a month earlier than the majority of people are thinking. But then only about 2 hours later, you look at this now, and this is now dropped again to where now a rate cut is down to 30%. You know, that's about an almost 18% drop, 16% drop from what we saw before after all the rumor mill, the pump, and then the dump again. But then we also have the Fed out there meeting today. What do you expect? Do you think this sort of geopolitical gymnastics that's going on right now, especially internally with Jerome Powell and Donald Trump, the Fed and the administration, is going to continue all the way through June, maybe longer? Do you think we'll get a rate cut because things are breaking? How do you see the landscape there?
Yeah, that's we saw Jerome Powell speak the other day, and it sounded really like no change. Like it just sounded like he was sticking to his guns. He wasn't budging. He wasn't even going to comment on the politics of everything. And I know a lot of people are thinking that like Jerome Powell's going to jump in and, slash the rates because the stock market's dumping. But I don't think it would look very good if Jerome Powell had just made that speech that he did the other day where he was like very stubborn, and then all of a sudden he's just like, "Oh, okay, yeah, we'll do that," and like it's gonna look so like flimsy almost. So I don't really see it happening that they're just gonna cut that to like an emergency cut, because I don't think Jerome Powell is gonna jump to sort of like save the stock market from this correction that it's in. Right, we're still above 2022 highs as potential new support today, so it's not like it's not the end of the world. And so I don't see him jumping in just because the stock market's down. I think he's looking at a much bigger picture. You know, he's looking at everyone. All industries. You get the point. So I don't see. I could be wrong. I'd be very surprised if Jerome or if the Fed just sort of flipped on a dime and was like, okay, we give up. Here's your cut. I'm sure the markets would like it, but it would also it would make me less confident in the Fed, because it's like, okay, you guys don't seem very sure about your ideas because you seem so confident, stubborn the other day, and now you're going to do this. Do you even know what's going on anymore? That's what I would think, because I feel like they should have it under control. They should have a very good plan. Whatever, see through with that plan. But I guess if there was an extreme, if something made like beyond the stock market was taking place, then it would make sense. But if it was just, that's just my opinion. So I guess we'll see. Yeah, I don't think he's going to budge too quick, because I think another thing that's important is the Fed's predictability. The Fed has been very unpredictable recently. Well, kind of like not as predictable as past years, and that I think is another thing that's causing the markets to so much bearish speculations, because people aren't
Well,
too sure
let's also look.
exactly what the Fed's. Yeah,
The tech based stocks as well. I mean, down. This has changed a bit also from 2 days ago. But even these numbers, minus 63% on AMD, 51% down on Tesla. And I'm still very confident in Tesla going into the future with everything that they're building. It's basically you get a half off deal on Tesla right now. It's actually dropped a bit more from there. Broadcom, 42%, 39% on Nvidia. I mean, the list, it's incredible. But then beyond this, then we see on the tariff side of stuff, you also see things starting to come to bear. We saw the China news this morning with Donald Trump saying, "Okay, listen, if you don't reduce that 34%, you're getting another 50% by tomorrow." So I do think we're still into some chop, but we do see the European Commission President, von der, whatever his name is, says the European Union is ready to negotiate for the U.S. On tariffs. I mean, there's a lot of things going on in this market right now that we need to pay attention to beyond just what's going on Bitcoin. But we all can't help but watch that. But Gary Cardone did a great post also. He said, this is only accelerating Bitcoin's position on the world stage. Is it scary right now? Sure. But let's not forget, everybody. Let's not forget, if we zoom out on this, I know you got, for those of you that watch here regularly, just remember on previous cycles, where's that chart at? On previous cycles, this is not something like what's so different. We're seeing 42%, 34%, 34%, 44%. I mean, and what we're seeing right now, yeah, we've had some more sideways action with decent sized corrections, sideways action with a lot of pretty large corrections within it. And then this ultimately just in a falling channel, a falling wedge, however you want to measure it, but just testing a previous range high. I don't get worried until we kind of lose this. This is a 3-day chart. So this would be the 200 moving average on the 3-day. If we got down into this region, down in the low 60s, I start really questioning what's going on this cycle. But ultimately, the landscape is still very bullish on what's to come. Now, maybe we're going to have a very rough year and we don't have the 4-year cycle narrative, and we see, a major boom in 26 and 27, which would be really interesting.
Yeah, it's interesting when you were just talking about the corrections that we had in previous cycles and how the current correction is 30%, 31 or whatever it is, 30%, which is really standard for Bitcoin, right? Bitcoin did not follow the S&P on that major dip that it had. It kind of just sat still that day, which was a huge win for Bitcoin. It gives it a little bit more of a safe haven narrative. Bitcoin is not a safe haven when the stock market's crashing, never has been. But that's only, the decoupling can only happen slowly and surely over time. And that was like one day where it's like, okay, you add another point. You go, okay, Bitcoin didn't dump that day, which was a big down day. Great. That adds another point to the narrative, but it has to build. It has to have hundreds of points over time for people to believe it. But hold on, I just kind of got off track. This correction is 30% above the previous resistance as potential new support. What I notice is that when the cycle's ending, you usually get a correction of like 50% or 60, like a really big percentage swing down that sort of cuts through a bunch of structure, and it's very damaging. It's like a death blow, but it doesn't necessarily appear to be in the moment. Like when we came off of, if you look at it on log scale, I guess, right, 2018, what is the percentage move on this? From high to, it was 70%, right? That's a huge pullback. That was like the death blow to the structure. But you still got a nice rebound up 100%. And using your fibs from high to low, I guess you go on linear scale, log scale, you hit your 50% retrace. So when you get that big one that's like 50% or more, that's when you start to find lower highs, and then the momentum shifts down. That's what I've noticed. And the same thing happens over here, 2021. What is the correct? Probably 60. What is this? Or 55%? 55%. That's like a really, really big hit. Structure gets damaged, and yeah, we hit a new all-time high, but ultimately the momentum is shot, and we come down, right? And I guess you could even go back to cycles before that if I went on another chart here, right? But in this case right now for Bitcoin, a 30% dip above previous resistance as potential new support, I would not consider that a death blow, right? This is still fairly clean. And so if the cycle was ending and it was going to, the signal that I'm talking about is one where you would have and this could still happen, but a move that is down, 50, 60%, where you really just tear through the structure. And then you get your big rebounds into lower highs and the momentum begins to curl. And this is always very confusing for people if this plays out, because it'll go back to or above 100K and it's going to look like a recovery. You're going to go, oh my God, we're near the all-time high. And this is why altcoins usually do really well when Bitcoin's at its lower high at the end of a cycle, because it appears to be a recovery. and people start to speculate, oh, new all-time highs, we're going to the moon again. I need to load up on my alts. And the altcoin market does really well on lower highs. So when Bitcoin first breaks out, it has all the momentum, it has all the liquidity. But on the second drive up, right, we've only had one drive up this cycle. One breakout, one pullback from a large scale perspective. In the last cycle, it was the second breakout. It wasn't this one. We hit 42, we pulled back to 28. And then on the second breakout, that's when the altcoins actually ran, right? And here, when Bitcoin went flat, the altcoins did really well. They were going to the moon while Bitcoin was going flat, getting lower highs, right? So, and also over here as well. But my point is, even in this scenario where we have this damage done, that bounce, that rebound is a very exciting trading environment where things actually do really well, because people don't know that the cycle's ending or whatever. And even when you're ending the cycle, it's actually oftentimes one of the best moments. And so I'm not really worried. Like regardless, I'm not really too worried, right? Right now, you're getting a bad deal, right? You're selling down here, you're getting a bad deal. You go back to 2021, you're selling down here, you're getting a bad deal. Go back to 2018, even selling down here at 6K, it's a bad deal. You could have got 11 or 12 instead. There's always a reaction up. I'm just talking about even in the worst case, right? I can't say always, because I guess, maybe it's famous last words or whatever. But the way that I see it, if you know what to look for, I wouldn't be too worried right now. Even in the event of going lower, there's going to be something there's going to be a reaction up into a lower high of some kind. That's at least just from my experience. So,
well, on that note, Sleepyhead here decided to wake up from his dreams of Greenland while he was swimming in tears of sadness of everything going on in this market. Mr. Matthew Hyland, welcome
This
to
guy.
the show.
This guy's always trying to roast me and stuff. It's freaking crazy. What's up?
You know what? You're very roastable, but I love you, my friend. Hey,
you should call the cops.
Yeah, what are you seeing? What are you looking at, man? What are you feeling like is going on in this market right now? I mean, it's you think it's over? I got to adjust all your cameras every time you come on because you change your position. You got to get yourself a fixed position, my guy. There we go. All right, yeah. So, what are you feeling about this market? Are you over it? Are you still hanging tough? What are you doing?
I think it's at a decision point. I was watching your stream earlier with Kevin when Kevin was talking. It's definitely at a decision point, especially with if you look at like Bitcoin, for example. You would think this is the area, right? It actually didn't test down to it yet. Maybe it doesn't, but this is where buyers should show up. If there's demand for Bitcoin, this is where buyers should show up. If there's no buyers, let's say Bitcoin just slides through this 70 to, it's really 69 to 74K. That's where you would expect buyers to show up. If Bitcoin just slides right through it and starts closing weeklies below it, then if there's no demand there, then that's quite alarming, just from like a cycle standpoint. But more logically, like Kevin said, if you just like look at this chart, um, if this was like on the 15-minute time frame, this is just a retest currently. It's going to be a retest of a breakout.
I
And
love
that's,
that RSI is gone so far down though. In the bullish case that
yeah,
we do get a strong reversal, it's like, man, the amount of room we can run is magnificent now. But
the,
that's
the,
if we
the,
get
the
that
most,
swing.
the most interesting one is the monthly RSI. If you look at this monthly RSI is making a lower low currently below the August lows. And this isn't something we've seen, I don't think ever. If you go back to the last three cycles, there's never been, if I look at this, I don't think there's ever been any sort of lower low on the RSI, but higher low on the price on the monthly time frame. So if this ends up closing like this for April, we'll see how this ends up closing. If you look here, it actually closed above this for March. So we'll have to wait for the April close. There's plenty of time left for this to, make its decision. But if it ends up closing below while the price is making a much higher high or higher low, it would have the opportunity then to make bullish divergence on the monthly time frame in the future. it is
Well,
interesting. I don't.
what's crazy to that though is it's like we had a pretty profound bearish divergence there, followed up immediately by a pretty massive hidden bullish divergence.
Yeah, it was a bearish divergence, and now perhaps there's going to be a bullish divergence made in the middle of this, which goes to show that this cycle is been different, right? It's just been much different if something like that were to play out, because that's something that we didn't see in the past. Usually, once when we started running, it just ran straight up. And like here, this is back in 2021, there was no bullish divergence. Back here in 2017, there was no monthly bullish divergence formed at all. So it usually has only come at the bottoms, right? When the price went when this was a lower high compared to the previous cycle, while the RSI made a lower low. So that made that bullish divergence back here, and this is January 2023. So it's definitely different. The main thing to really watch is the S&P 500 as well. Let me go down to the weekly time frame. This is also where you would expect buyers of the S&P 500 to show up. If regardless of the confusion about the tariffs and just all the chaos and uncertainty currently, if you believe in the U.S. stock market, this is the area where you would buy, right? If you think long term the U.S. stock market will be fine, this is the area that buyers should show up. If we were to close or just go right through this support level, then there probably is much larger problems at play. But I don't think we're there yet. And I think the thing that people have to remember, I mean, despite the Fed being kind of slow still, or just not, or wanting to take action or anything like that, they still have more tools in their arsenal currently than probably since 2008. They could drop interest rates by what, 4.5% potentially. They haven't done any QE, so there's plenty of ammunition the Fed has. They've just been kind of reluctant to use it, and I think really the reason why, probably, if I were to guess, is I think the period that the Fed just went through with the CPI and inflation being super high probably spooked them, right? I think they did QE from 2009 till what, 2021 essentially, and during the 2010s when they were doing the QE, we didn't see inflation rise, so they got away with it during that time. They were doing QE during that time period, but there was no inflation. When we had the most recent QE, or quantitative easing, after 2020, that's when we saw inflation rise. And I think they've been kind of spooked in a sense, where they're essentially kind of reluctant to use it. But one of the things that they'll probably end up looking at is a CPI, which we will get on Wednesday, right? We'll get the CPI update on Wednesday. So if you look at Trueflation, CPI has been pretty much tracking this pretty closely. We've gone over this a few times. This is showing that inflation is really crashing at this point. Currently, Trueflation has at 1.4%. I think the last update we had on CPI was 2.8%, I believe, or 2.9. We're going to get another update on Wednesday, and the update should be, I believe, for March. It would be, right. It would be the March. No, it'd be the February update.
Yeah.
It like lags a month. So in February, if you look back here in February, this is when it dropped from around 2.8%, which we had in January, which also CPI showed. This is when it dropped down close to 2%, and was in that range between 2% to 2.3%. So I would think if the Fed gets a CPI read, or if we get a CPI read on Wednesday that shows 2.3%, 2.4%, I would think the markets would really, really like it, because then the Fed, it's going to be closer to their target, but it's also showing that this is following this. And then maybe the following month in May, which I believe comes after the FOMC, I believe the FOMC is like May 5th or 6th. The CPI is March 10th. Maybe in that read, during that May update, we actually finally see CPI reach to 2%, or get close, maybe 2.1%, possibly, right? So the Fed has been saying last week, like Jerome Powell, like Kevin said earlier, he was saying that they want to get to the target of 2%. So when they get there, if they get there soon, within a month or so, they can't keep using that as a reason, as like a reason why they don't want to do Q or drop rates or anything like that. So it definitely would shift things. So just watch the CPI on Wednesday. I think it should come in lower. I'm not sure what the expectation is, but I'll look it up in a second. But I think the CPI, the markets more likely than not are going to like on Wednesday. If it somehow comes in way higher, like 2.7, 2.8%, the markets aren't going to like it. But it's probably going to come in lower. So I
Well, I
think
think
that's
I think I think
something to
one of
look
the
forward
things
to.
people are interested in right now, and you've brought this up a number of times, Matthew. And again, I just wanted to shout out Matthew and Kevin for coming on. Make sure you are following them. I'm just going to pull that up real quick. But Matt, while I'm doing this pull up, we want to see: do you think it's likely we're going to have Bitcoin sniff out the reversal before the stock market, like we've seen historically? What do those charts look like? Because I know you've been sharing those a bit as of late as
Yeah.
well.
If we go to the Bitcoin chart, let me try to just set this up. We'll compare this with the S&P 500. Oops. All right. So if you go to the Bitcoin chart, let me get rid of the RSI. You can see my screen, right, Kelly?
Yep.
If you go back historically, you go back here to 2020, Bitcoin actually bottomed about 10 days prior before the stock market bottom. This was Friday, March 13th. Stock market went down for another 10 days while Bitcoin kind of rose up. So it kind of decoupled for about a week and a half. And then if you go to last cycle, Bitcoin ended up bottoming after. This was due to FTX. But if you look at total two, oops, let me lower this. If you look at total two bottomed before the stock market. So total two, Ethereum, most of the alts, they bottomed in June of 2022, while the stock market didn't bottom until October of 2022. So there is a history of crypto finding its bottom first. So it really wouldn't be too crazy, right, if Bitcoin starts to rally out of this first before the stock market. And I think the reason why it is because it runs 24/7. While people probably spent the weekend in fear, like people who have 401ks are invested in stocks, they couldn't sell it on Saturday or Sunday. While yesterday, obviously, we saw a lot of people sell their crypto and whatnot
Well, you know
because it's
what?
open
Wait. To
24/7.
that point, Bitcoin sold off leading into the futures open, which is because you could see all the signs on the wall that there was likely going to be a pretty bloody futures open across, traditional equities as well as Bitcoin futures. But what happened was it sold off, but then had a little bit of a pullback up, and then the markets, when the futures opened, dropped, and so too did Bitcoin. But Bitcoin was leading,
Yeah,
was able because it was 24 liquid.
yeah. Yeah, it's 24/7, so a lot of people or crypto kind of started to sell off first. And it really made sense, and I kind of like said this in my Discord. It made sense that today on Monday we would see the stock market sell off because a lot of people, like if you just think about it logically, right, there's probably a lot of like older folk, people that have their money in the 401k on Thursday and Friday, the stock market dropped 5% each day. And a lot of people don't check their stocks every single day, right? So probably a lot of them found out or started to hear about the news of the stock market dropping probably Friday afternoon, Friday night, probably heard about it all over the weekend. So come Monday morning today, the first thing they probably wanted to do was, de-risk, sell stuff into stables, get more defensive here because all the news headlines, if you looked on like every like news website, I posted on Twitter last night. If you look on any mainstream media news website, everything was just stock market crashing, stock market down, Dow futures down 1,000 or 1,500 points. So this is not just like a small financial story. This is like the story right now. This story, like in the United States or even across the world right now, is that the global markets are melting down. Like it's become that big of a story. So everyone knows about it. Like I got texts from friends who they don't follow the markets at all, and they're just like, "What's going on? Like, are the markets like done?" And I'm just like, "That's weird. Like you're texting me about that," but it's not surprising, right? Retail finds out about it over the weekend, and I think that's what you're seeing with the stock market here. So I would think if you go back to the S&P 500, um, I would think that this at least would be some sort of bottom here, temporary bottom at least. If you just look at this sell-off, this is pretty much almost on par with what we saw back here in 2020. Just a complete nosedive. It is interesting. I think too, back in 2020, a lot of it was caused by just complete uncertainty. People didn't know like with businesses shutting down and just how the money would move around and whatnot, it caused a lot of chaos, confusion, uncertainty. And now we're seeing that again because, like, if you own a business, right? If you run a business, someone said this as well in my Discord. If you own a business, will you be more, you know, you're probably going to be more defensive here. You're not going to be willing to take on as much risk. You're not going to be willing to spend as much. And that also goes back to what Powell said, which I personally disagree with. He said that tariffs are inflationary, which I agree, right? Tariffs raise the prices, but if it also craters demand, if there's no demand to support those prices, um, will those prices end up holding? And we saw this in 2019. There were tariffs in 29 or implemented in 2018, and 2019 the CPI was actually 1.9%, despite there being tariffs. Obviously, those tariffs weren't as large, but inflation actually went down. So I think in times of fear and uncertainty, people are not going to, spend more. A lot of people probably, even just people in general right now, they're seeing their 401k go down, they're seeing their crypto go down. They're probably not going to be spending as much, just logically. So yes, tariffs do cause prices to go up initially. Maybe they raise the prices, but I think if it craters demand, it could have the inverse effect at the end of the day.
Yeah, it's there's a lot on the chopping block right now to unpack, and if we had again, there wasn't a lot of even everybody agreeing last night. These were powerhouse people in markets that we had. It's like 6,000 people listening live. I think like 150,000 people tuned in, and people were just people. I don't want to say there's infighting, but there's a lot of confusion from different lenses as to if this was, kind of fully intentional to drop the markets to get the Fed in the position to where they can cut rates, or if it was a grander thing. Is it ego based? Is it, is all this going to be a pump fake to the downside to then have this swift reversal after we get some change in, what's going on with the U.S. 10-year yield, as well as what's going on with the bonds, as well as there's so much on the table right now that it feels like it's getting frustrating because it's not like these easy probabilities of looking at a bull flag and it's a 72% breakout to the upside. Now it's like, fuck, we've looked at the last year, almost every bullish structure I've seen that does end up going to the upside, like it suggests, has almost at about a 90% hit rate faked out to the downside before up. And that's not even considering where we're at now with what we're looking with all the tariffs on the table, with what's going on with everything geopolitically, geoeconomically. We're not even talking about Ukraine anymore. It's funny how that channel got switched so quick with tariff talks on the table. So I do think people are starting to get nervous. What we're seeing with, it's just across the board. There's just, I feel like, and it gets scary saying this, I feel like we're at max uncertainty, but can things get crazier? That's the crazy thing. Are we going to see something where Bitcoin does drop to 30K? Do you guys see some eventuality like that? Or do you feel like we're getting to that max fear where we're looking at the really crazy bearish stuff, but that actually doesn't happen? And we're just right now, especially in Bitcoin, only testing a previous range high.
Something that a lot of people forget is that sideways is also is a direction that the markets can take. Now, Bitcoin it's very directional. It's a momentum based thing. But if you switch to my screen, I just kind of drew up. I think that's your screen.
Sorry, I got 47 different things I have to click.
I was just this is the S&P, right? And this is just a random like drawing I did, right? It's not to scale. It's not to. I literally just put this together. But I was just who says we have to go up or down? We could literally just chop for a long time. We've seen ranges like this, 2017, 2018, where you get higher highs and lower lows, higher highs, lower lows. The stock market does this very routinely at a certain point, usually after major decade-long uptrends. You have these highs, lower lows, highs, slightly lower low, and then you run up. And people forget that there comes a point in the markets where things kind of settle. This is the 60s to the 80s. Higher highs, lower lows, higher high, slightly lower low, very sideways. And I think people forget, we don't have to go in one direction. We could chop. It could be a trader's market. It's possible.
You know what, Kevin, to your point, if we are going to move towards something where they are doing pretty large tax cuts, like beyond what we normally see. And they are going to actually move to some sort of external revenue service, and they are going to persist with tariffs and stuff like that. That is a pretty major geoeconomic shift that would spell a transitionary period where there is a lot of just sussing things out for a period of time before it's going to take a while, because that would be a whole new normal that we'd have to fall into, and there'd be a nightmare for most people, but a trader's dream for somebody that's trading those massive swings.
Yeah. If you're taking profits at new highs and buying at new lows, I mean, that's like a trader's market. The stock market always eventually does something like that. I think it was Stanley Druckenmiller who had a speech, I think in 2022, where he was saying that all the factors that drove the market from 2008 to where we are today, and even before that, from the 80s to the 2000s, and then from 2008 to where we are today, all the factors that drove that are kind of being reversed right now, like with policy, and also we have deglobalization, which is a big factor. Instead of like cooperation, we're seeing sanctions and trade war. And so and high interest rates. It's just a very different environment. So would it really be a surprise if we were choppy for a while? Not necessarily super bullish, not necessarily super bearish, kind of just make everyone's head spin for a while. This is not to scale. This is not an exact prediction, but I just kind of grabbed a previous chart formation. Would that really surprise you? It wouldn't surprise me at all. It almost seems very fitting for the time that we seem to be entering right now. I think we're going to see a lot of chop, and with the way that we have tensions rising, there's war, there's trade war now. I mean, you're going to see there's going to be like news articles every week, every month, something new happens, and there's going to be like these narratives within narratives that start changing and altering and evolving, and there's going to be chaos. So why would the market go up in a straight line like from 2008 to now? I just don't think it will. I think we're probably going to be ranging, chopping, a mean reverting market, a trader's market, whatever you might want to call it. And again, this is not exactly what I predict, but I'm just showing you kind of the insanity of it. So yeah, higher highs followed by lower lows, followed by higher highs and lower lows, and even lower lows. That's the kind of stuff I expect for the S&P. Let me be clear. I'm not saying that Bitcoin's going to do that, right? Bitcoin, the way that Bitcoin is affected by a market like this, it all depends on how well Bitcoin responds to the upside. How much ground it can gain on the upside will determine a lot about its structure in the end. It doesn't have to do exactly this or whatever. This is just kind of showing you the idea of a sideways market. Bitcoin is its own asset class, right? It can have narratives, new narratives, whatever. So it's not necessarily going to do exactly what the S&P does, but what it will do is it almost always takes the direction of the S&P, right? Whether it goes up faster, right, or not as fast, that's different. The percentages, that's different. The direction is where the correlation is key.
Yeah, I hear you there. It's a frustrating time if you're wanting it to go up in the next 3 days. There's no telling. Maybe it does, maybe it doesn't. I think right now everybody needs to, I don't want to say de-risk, but de-risk yourself from stress. Tune in to Kevin's got to content that he does on a daily basis, whether it's on his Twitter or the videos he puts out and his private groups as well. Matthew Hyland also content all day long on his Twitter and his Patreon. And of course, we try to keep you in the know here on BitLab. I do appreciate you both, my brothers, coming on. I will be, we got our house, everything sorted for Bitcoin conference. It seems like it's going to be all influencers there. I don't think there's going to be many crypto tourists unless the market reverses between now and then. May 26th to the 30th is when we got that house. If you guys want to, we can coordinate with that offline, but should still be a good time. I'm still very bullish on the long term, but the long term, the midterm is starting to look a little bit questionable about how immediately bullish it's going to be. So we're going to have to wrap it here. I got some things I got to go to. I'm going to send you all, everybody, I'm going to redirect you over to the Sin City Crypto Boys. I will be in their studio. I'll bring you guys as well. I'll be in their studio when we are in Vegas. They have an awesome studio, but they're live right now. So I'm going to ask you all, when we get over there, when we end this, head over to the Sin City Crypto. Just stay on the stream. It'll redirect you, or head over there yourself and say the BitLab fam sent you. Go, everybody, show some love there. But Kevin, Matthew, I appreciate you guys coming on. I'll connect with you guys offline. I'm going to be ending this. I have to run straight to a call. So I'll connect with you guys this evening. I love you all. I appreciate you. Keep your head up. It's these market times. Kevin and Matthew will tell you, it's these types of things in the markets that in 6 months or a year or 2 years or 5 years, when people come in, you're like, oh no, I was there in that fucking crazy time. I was able to buy at 77,000. People are gonna be like, what? The price will be 238,000. They're going to look at you like a legend, but you have to still be in the market in order to be that legend. But I love you guys. I appreciate you guys, every one of you. Heading over to Sin City Crypto now. That's all we got today. Thank you guys so much. I appreciate y'all's alpha.
Thanks, Kelly. See you guys. Smash the like button.
Hit that like button, baby. We'll see you guys on the next one. Adios.